Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Rene Reyna, head of Thematic and specialty product strategy at Invesco, to discuss relative strength analysis and how it can fit into one's portfolio. Rene, it's great to see you as always. Welcome back to Trade Talks.
Hey, thanks, Jill. Happy to be here.
Is momentum investing back in favor with investors?
It's interesting. I think if the obvious is we look this year, clearly there's been a lot of fear of recession. And many investors have been caught off guard by the S&P strong return. And we all look under the hood and see that that's primarily been driven by 7 stocks. And so I think right now we're in an environment where investors are just asking themselves, will those 7 winners sort of join the losers, or will the losers sort of join the winners? And I think when we look at the market today, it does appear that there's a little bit of a healthy broadening out. An acceleration of breadth is occurring. Specifically, if I just look from the end of May through yesterday's market close as an example. So we're seeing strong price acceleration in areas like industrials, basic materials, consumer discretionary. And if I think about momentum as a broad factor, it's not necessarily returned sort of collectively, but I think a specific type of momentum investing using relative strength or a relative strength index does appear to be gaining steam. And so, if I just look at the market today, if I look at the S&P 500 versus, an index that is using relative strength, sort of broad market, over the last month, we've seen outperformance. The same is occurring, industrials using, these technical factors versus sort of broad or bulk beta exposure. You see it in basic materials, you see it in consumer discretionary. And from a flows perspective, we've seen an uptick. So I think clients are interested. They're starting to pique their interest, and so I do see a segment of momentum investment really starting to pick up. Especially over the last month.
What is relative strength analysis, and how can it fit into an investor's portfolio?
Yeah, so it's a form of technical investing. It essentially uses point and figure charting, tries to measure market leadership, determine when stocks are either overbought or oversold. A lot of times these factors, do input, both intermediate and long-term price movement. So think 50-day, 200-day moving averages, as an example, are factored in. And so relative strength index is, effectively a scoring system. It's identifying momentum, sort of when to buy, when to sell. I think the most important thought process in today's environment is really, can I buy high and sell even higher? And so it's a great way to complement fundamental analysis. We think of active management, or even in some cases, just sort of your core satellite type ETF positions. This is a great way to complement those types of holdings. And again, I go back to my comment earlier. I think investors are really saying, hey, is this an environment to where you sort of buy the dip, look for opportunities for the market to grind higher, and where can I find an opportunity? I think specifically using like a Dorsey Wright momentum strategy can really make sense.
Right, and to my next question here, is there a convenient way for investors that want to implement relative strength into their portfolio?
There certainly is. So, momentum strategies are not new. There's a variety of options. From an ETF perspective, I look at one Invesco strategy that stands out. The ticker is PDP. It's the Invesco Momentum ETF. It tracks the Nasdaq Dorsey Wright Tech Leaders Index. And effectively what this index or methodology for this ETF does is, it first starts off with 1,000 largest companies from the Nasdaq US Benchmark Index. From there, I mentioned the relative strength index. That scoring methodology is applied to those 1,000 securities. Those 1,000 securities are then ranked from highest score to lowest. And then the top 100 securities are then selected to represent the index and the basket of the ETF, so PDP. What's interesting about that approach is there's no bias towards sectors or industries. So you're really ensuring, investors ensuring that they're owning companies with the highest relative strength score. And then that process is repeated on a quarterly basis. When I look at that fund particularly, so PDP, it's got a strong track record, strong asset base, so $1 billion in AUM. The fund's been around for 16 years, so incepted since 2007. And when I look at the fund today in terms of allocation, you are seeing overweights in industrials, in technology, and consumer discretionary. So those areas where we have seen sort of momentum uptick over the last 30 days, or at least since the end of May. So a great convenient way to get exposure to this type of investing in an ETF that's got a strong track record and asset base.
All right, Rene, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.